right now we are in the early stages of a major bull market in lithium. This is all driven by the energy transition to these battery metals, the whole EV boom. And we've already seen some of the early leaders in the lithium space, the up 1,000, 2,000% stocks like Patriot Metals. I think it's been a 20 bagger, Brunswick, and investors are now looking for the next ground floor opportunity, and that brings us to Stria. Coincidentally, Stria, Dean, correct me if I'm wrong, but Stria is located right next to Patriot. Your projects are right next to them.
Yeah, our project, I mean, Patriot has a number of projects, their flagship being further north, but they have a project after we staked at Stria, and we picked it up, like, back in 2013, when it was very easy to get, really good properties compared to today. And because of the results in that, I think that we've had, you've seen Patriot is beside us. They have staked claims, as well as Brunswick has a massive project as well, just to the east of us, a bit northeast, and southeast rather. And then, you've got a number of others too, like they're everywhere. I mean, this area, Pontax area, is really, really hot. I think there's only a certain amount of regions that have lithium. So, everybody's trying to get as much land banking as they can in the hot areas where people have found stuff, because again, it's, the government's paying now, at least the Canadian government is paying you to use North American minerals as well as the US. So it makes sense if you're going to be getting subsidies, everybody realizes a great opportunity.
You're in the right spot. This is, I mean, lithium in North America, this is the place to be. And again, I think there's some early investors, especially I think a lot of Canadian investors who are more mining oriented, they've gotten into lithium early on. And again, we're still in really the early stages, even though we've already seen, again, some of the stocks are up 10x, 20x, some of the early leaders. And this is just the start of, again, a generational bull market in these battery metals, because we all know about this energy transition. And you are, again, we've called it before, it's the Saudi Arabia. It's basically the Saudi Arabia of lithium, James Bay in Quebec. Dean, before we get into all the exciting stuff, we're going to talk about the latest drill results. We're going to talk about the new property that you're picking up, which basically doubles the size of your position in the Saudi Arabia of lithium. But first, before we get into all that, for anybody that's new, give us a quick snapshot of what Stria is doing.
Well, basically, Stria Lithium, I mean, we picked up this project back in 2013, looked across Quebec. This was one of the best properties that we're seeing. They picked it up. I came in a few years ago. Really, lithium started to move. We started seeing all the subsidies, the United States government with the Inflation's Act. So we decided to really put a good effort into the property. The property hasn't disappointed. We hit on basically every hole but one. We did a partnership with the Australian company Cygnus Metals that have an expertise in this. Obviously, Western Australia, these are the pegmatite hard rock specialists. We did a deal with them where they're paying us, and they're basically doing all of the exploration work. They've done a fantastic job. They've drilled, close to 15,000 meters of drilling. We're waiting on a lot of assays back, and they have said that they'll have a resource estimate out sometime this summer. We're very pleased with the property, and we realize that on strike, there's properties around us as well, and that kind of leads us to why we went out and purchased this next property.
Okay, so the idea is, so there's going to be a resource estimate this summer. We're already in May, right? We're in the first week of May right now. So we could be, 8 weeks away, maybe probably 8 to 10 weeks away from what could be a major catalyst for the stock, which would be this resource estimate.
Well, yeah, Cygnus has mentioned that. I mean, they've said that they'll be coming out with this resource estimate. I mean, lithium is a bit different than gold and some of the other things that maybe some of your viewers have invested in. You really have to hit, 10 million metric tons to kind of be a player. If you look at the companies around us, I mean, that's kind of the numbers, 10 million, 20 million. I mean, the base is 10. So it's a very realistic number. I mean, generally a lot of people are doing it in 15, 17,000 meters. So we'll see where they get to. We're excited for that to come out, and we look forward to having a look at it.
Okay. And by the way, just so you know, this is, obviously the whole idea of these live streams is we're going to be opening up for audience questions. So anybody that has questions, you're welcome to ask the questions. We always have some good mining people on these things. So hopefully later on in this in the live stream, we'll get some good Q&A going. So the idea is to get about 10 million metric tons. You want to talk about you want to give a quick snapshot about some of the latest. What's that?
Yeah, sorry, I was just saying, 10 million is the minimum. I mean, that's the benchmark, and you can take that problem. We're looking for more, obviously, and the properties is a very large property, and we're gonna lots of drilling left. But yeah, the minimum's 10 million.
Okay, and the idea is, so from what we talked about before, is you're in this great position where there is already infrastructure there, right? There is I think you're right near a major road. There's a processing plant. So the reality is, you have a much lower bar, or sort of like a lower hurdle to have an economically viable project based on the location where you're at.
Yeah, and I think that's again why that property was picked back in 2013, when you could just basically pick anything. You pick the one that's closest to the road, the closest one that will allow you to get the ore out. I mean, there are some great projects out there with great numbers, but are they going to be in production in the next 5 to 10 years, 15 years even? I don't think so. So for us, it's really about finding as much as we can throughout the property. It's very easy to mine lithium. I mean, you could have 30, 40 meters open pit it. It's not like these massive open pits that you see on the sometimes on the internet, or they're very small. You can take them out, very lucrative, very profitable. You have white rock and black rock, very easy to separate. And we're excited because of the proximity that we are and the hydro that's adjacent to the property.
If you're enjoying this video, make sure to click that like and subscribe button to subscribe to our YouTube channel. Also get the notifications to get updates on all our latest videos. And of course, make sure you get a copy of my #1 bestseller book, 10 Bagger Blueprint, #1 bestseller on Amazon. Gives you my proven framework, the proven system for finding stocks that can go up 10x to 100x. Now look, I've created over $1 trillion in wealth for investors over the course of the last 25 years. And this book gives you that proven framework, a proven 10-step system for finding those stocks, which can go 10x to 100x. It tells you the signals to look for, when to get in, when to get out. It goes into fundamentals, technicals, charts, all the stuff that you need. So again, 10 Bagger Blueprint on Amazon, and here's to your 100x. Let's make it accessible for, easy for investors to understand, like some of these numbers, because I think 10 million metric tons, it sounds like, why this? Okay, so it's actually not a lot. 10 million metric tons is like, a couple of truckloads of dirt, basically. I mean, I'm exaggerating a little bit, but it's not that much. So based on the drilling so far, let's say you get to, they get to this resource estimate of 10 million metric tons. What would that be worth? Again, we're not saying that, because again, we're still early, right? Until it's official, it's not, but what would, what is that worth in today's market, 10 million metric tons in the location where you're at?
So I would say, I mean, I can't obviously say what the value is, but what I would say is, if I look at other companies, if someone was to look at other companies and kind of see what their market caps are based on 10 million metric tons or 20 million metric tons, we kind of see, when I look at it, probably about $100 million worth of market cap for every 10 million metric tons. I mean, this is again an unofficial.
This is something that people can get their head around, because again, I think it's important for investors. Really, we want them to kind of understand the upside potential, right? No, the downside, obviously, I think it's limited because we already have some, the drill results, everything else. But listen, with any stock, anything can go to zero, so there's always a risk, right? But it's important for people to understand the upside, so then they can make an informed decision, right? So let's say you get this resource estimate in the next 8 weeks, 10 million metric tons. Again, the comps ballpark 100 million bucks. Stria is trading at an eight. What is it? An 8 million valuation right now? Like an 10, under 10 million.
Yeah, under 10 million for sure, probably like 7. Yeah, I think that I think a lot of the investors, to really understand it better, you got to really look at the other companies that are going into production or have been permitted. And if you look at those numbers, you'll see that, you'll see someone like I don't know, Critical Elements has a 0.9%, right? Lithium. You've got other ones that are like 1.4%, like at Wabuchi. There's different ones. So I think people have to understand that the percentages that we're getting are in line with that. I know there's
Okay.
some companies have come out with just massive numbers and intervals, but again, I think people have to realize like what exactly goes into production and where you are, because I think it's an early mover thing. I think where we're located, having the opportunity for when we find it to pull it out is very realistic, right? I mean,
And
we're
he's yeah, and this is the thing. Like right now, it's kind of I don't want to say the word gold rush but there is an incredible need right now, a real urgency to get as much lithium as possible. And we have like Elon Musk is talking about this. He's like saying, "Hey, we need as much lithium. We need as much as much of these battery metals as possible right now." Because here's the thing: this energy transition, this transition to EVs, is happening. It's actually happening much faster than I think a lot of people expected. It's really going mainstream much quicker, and this is the real bottleneck is having the lithium, and you're right there. It's easy to access. This is not like somewhere where it's I don't know in some third world country on the other side of the world. It's right next to where all the automobile industry is in North America. Basically, you're right there. So this is
well, the largest, being in the United States, we share the
market.
largest unprotected border in the world, right? So the market is right there.
Yeah.
And
So
just
so go ahead.
to add to that, what I would say, Jack, is that I think the public doesn't realize that it's not just the amount required. Sorry, go ahead.
Oh no, so we're getting a slight delay in the internet. I think we're adding to each other's sense, but we're getting a delay in the internet. So we're going to talk
Okay.
slow here. Okay.
Yeah.
I
I would
just wanted
just
to.
add. Okay, go ahead. Sorry, Jack.
You go. You go. You go.
No, I
You go.
was gonna say one thing I was just gonna say is that people have to realize too that when you have subsidies being given out by your government, both the United States and Canadian government, that then means that if you use North American critical minerals, those companies, whether it be an OEM, a battery manufacturer, a car manufacturer, any one of those parties that are involved will be getting paid directly from the government a unit price as a subsidy. And if you've seen recently, the Canadian government made a deal for 13 billion for Volkswagen over 10 years, which is 1.3 billion in subsidies. So when you're getting a subsidy, it means that there is a difference between North American lithium and the rest of the world lithium. Because if I'm paying you to take North American lithium, then I'm going to use that. So we need to get there. And there's a delay between 2030, 2035 in exploring, finding, permitting, extracting the minerals. So to your point, the time is right now. The investment opportunity to make money is now, not in 10 years. It's now because there is a delay. And this is when the opportunity is here.
Yeah. So the bottom line is there's a premium that's being paid for this North American lithium. You're in the right spot, right location. So far, the drill results. And by the way, anybody watching this, it's all public information. All the press releases go through all the all the deep data. If anybody wants to look at that, all the grades of the drilling and everything else. I want to keep this into really kind of like at kind of like a general high level. And again, if we have anybody that has like detailed technical questions, they're welcome to ask. I just want to keep it accessible for kind of mainstream investors. And by the way, what's interesting, Dean, is that what's happening right now is because lithium is it's part of this. I mean, it's a critical part of of the EV boom, we're starting to attract tech investors, right? Traditionally, mining stocks, resource stocks, it was always a very niche type of thing. But I think right now we're in the early stages where I think this is going to start attracting tech investors, and all of a sudden, that's going to add fuel to the fire and add a premium to these, battery metal lithium stocks, which we're probably going to be seeing over the next, I think, 6 to 12 months. Again, with any bull market, again, this I'm just talking based on my personal experience. Usually, any major bull market, it starts with a couple of early leaders. They have big moves. There's a little bit of a consolidation, and then you have a major blowout. Like it goes totally exponential. We've seen that with, I mean, any of these multi-year booms. We had the cannabis stocks. I should mention cannabis was a little bit more, although it was a multi-year boom, but lithium really is. I mean, it's kind of like oil. I would say in like the 1920s, 1930s, oil stocks. I mean, if you could buy Standard Oil in the 1920s or whatever it was, just when the automobile industry was getting started, people realized, wow, this is we're moving from the horse and carriage to cars. We need this. We need the stuff that they pull out of the ground. We better invest in this. This is the same thing here. This is exactly the same thing because oil, it's pretty much going by the wayside over the time. But the EV thing is, it's not even just a replacement. I think why I'm so excited about this. Again, I want to get back to your story, but I'm so excited about the lithium because it's not just the replacing the internal combustion engine in cars. There's all sorts of new use cases for other battery. Like you have all these bikes. I mean, there's a tremendous amount of demand that's going to be coming in over the next like literally 18-24 months. I mean, it's growing like crazy. So this is why I think people really need to take a look at these lithium stocks, in my opinion.
I would also say that it's legislated demand. So there's a difference between the 20s. People started using cars based on what they could afford. They liked them. There was an adoption period. This is legislated government demand. You have to switch. So if you have 300 million cars in the United States and they're looking to have 150 of those electric vehicles by 2035, in Canada by 2030, every vehicle on the road, this is legislated demand. So I think you can guarantee that the demand side is there, and you see them actually on the supply side now, making sure that they can actually reach their goals. So that's the opportunity for the investor.
Now here's the thing. So right now we're waiting for this resource estimate. Next 8 weeks, potentially, that could be based on comps. Again, the comps in the market are, you throw out a number, let's call it 100 million. Now, the current project, now you have, I think, what is it? It's a 50% position, and your partner has, what is it? Cygnus has the other 50%, right? Basically, that's
the deal we did was, right now, technically, we own the whole project. They owe us another cash payment, which will be coming within, I'm sure, the next few weeks or month, because they've actually come to their expenditure. They've spent the money ahead of schedule. And then for that $2 million that would be coming in shares or stock would then give them 51% of the project. And then of course they have to give us another 3 million, spend another 6 million to get up to 30%. And then we're carried to feasibility. So at this stage, that would be a 50%, 49% once they paid the next 2 million.
Okay, so the other compelling thing about the stock is basically, like, look, unlike a lot of these junior exploration stocks, they say, we got this project, whatever, but then they still got to raise a bunch of cash to pay for the drilling and all this stuff. You're essentially done. Well, you got to sit back and relax. Well, everything has been financed. You're actually sitting in a big cash position, and now I think the idea is, I think we should really make clear is, really, I think the idea is your focus is on maximizing shareholder value and really riding this lithium bull market for all it's worth. And this is why you picked up this next project, because now you have this blue sky position. You have this blue sky opportunity. So it's not just let's just call it 50 million plus whatever upsides, which would make it like a 5x. But now you have this new additional project which doubles your position, and that's your completely blue sky. You want to talk about that a little bit?
Yeah, so I mean, we have the initial project. That initial central project is a very large project too. So I mean, the blue sky there continues. I mean, there's a lot of land, to explore there.
The existing Pontax.
The existing Pontax. I mean, you can explore that for years and years and years. I mean,
So
it's a
in
great.
theory, okay. So by the way, I correct. You should correct me because we threw out a number of 10 million is kind of a low bar. Let's say you get a bigger resource than 10. I mean, who know? I mean, this is just they've only explored a tiny part of the whole project. What percentage?
Very, very small. I mean, less than 1%. I mean, 2%. It's a massive property. So, I mean, I think the idea is that they've put a lot of work into the LiDAR and topography to find out where the pegmatites are. They're going to be doing work to remove the brush so you can see where they are. So there, anyway, that project, you could be there for a decade. Like that's a lot of work there. They kind of started with the obvious, which makes sense, right? We had this massive outcropping pegmatite. So they started with that, which is what we started with initially when we did some drilling, and we're successful at the drilling. And that's why they came into this project. The new project was very exciting. It's actually closer to the road. We go across that property in order to get to Pontac. So it's southwest of Pontac Central. Great property. We're very lucky to get it. To be honest, it's very difficult to get good property right now, as you can imagine. Right. It's a large land package. We picked it up basically through being located in the right city. I mean, we're in Ottawa, and it was an Ottawa group, people that we knew, some mutual people within the industry. They were looking. They picked it up 5 years ago. They were looking for gold. And did some work on it. And then, they had walked the property back then. They had seen, a different type of geology than what they were looking for. They did some sediment samples, what have you. They weren't, they weren't going to go forward with gold, but they let us know saying, hey guys, like you guys are right. This is right on your strike, right on the trend. And we visually walked this way back when, and we've done some work on it. And so we're able to make a deal with them. And they believe in the property. That's why, if you notice, if you do look at the deal online in the press release, you'll see they took a lot of it on the back end because I think they realize that there's hopefully some good value there, and we're going to go for that. So we've got another project now that will earn in 100%, and it'll be our project, and we'll just go out there and do what we do. Because I think the difference between our company and other companies is we're not your typical mining type management, in the sense, at least I'm not. And I've invested in a lot of junior mining companies, and one of the most frustrating things is I'm not a fan when they just keep basically raising money, spending it, spending, raising, rolling back, spending, raising. And so for us, like, the first thing I wanted to do is, I had to roll the company back. We have 25 million shares outstanding. We probably have about $2.45 million in the bank. We're waiting on another $2 million worth of goods. And that's
they're calling to put more money in.
Yeah, that's the bank. So yeah, so we've been very fortunate. I mean, we've got money coming in, and I think that for us, what we're looking to do is really keep a tight structure. We want to have that elasticity that if when we do find things, or when Cygnus finds things, it can actually move the stock, right? So that's kind of what you'll see with us. I mean, we've got a very tight float. Our strategy is to go out and we're good at being able to obtain really good properties, do some very good work at the beginning. And if this looks really good, we have the opportunity to either keep it, or we can make a deal again with someone else who wants to earn in and spend the money. We're looking to just drive shareholder value. That's our goal. We're not pretending to be miners. We're just looking to make sure we take advantage of, this tectonic plate shift that's happening today. And, I think that people will see that the value of these properties is going to be extremely valuable. I mean, we're talking about, California, Malibu beachfront, 150 years ago, 200 years ago. That's where we are today.
Even 50 years ago, you could have gotten it. Maybe 40 years ago, you could have gotten it cheap. But no, it's real. No, it's all these ways we describe this thing. It's really, I think it's really kind of under really underestimating this what's happening, what's going to happen, because it's with this whole energy transition. Because if we had this conversation, even 2 years ago, would have been like, okay, whatever. But it's really happening now. Like everywhere you go, you see just like more and more EVs. It's really going mainstream faster than anybody expected, and that's why all of a sudden, I had this kind of aha moment recently where I said, "Wow, this is really gonna happen." And again, I think with the lithium stocks, we're like in that probably first inning of a major bull market. So the bottom line, the takeaway for investors is this: you got this very significant project in the one of the best locations in the world. You have a partner that's essentially doing all the work. They have the expertise, right? Because here's the thing: what I think investors don't realize, what general, I mean, like, look, a lot of the, I guess, Canadian mining investors know this, but let's say the kind of the general investors who are not familiar with mining, what they don't realize is that 90% of these, exploration mining stocks, yeah, these guys, it's just some promoters that, they got a project, and they don't know anything about, exploration. They don't know anything about mining. They just, they're trying to run up the stock. By the time they getting where they're all diluted out here, you've actually brought, you've executed perfectly. I mean, you have this very tight structure. There's minimal dilution. Again, you've brought in the experts, and these guys. You want to just give people a quick recap of Cygnus in case anybody doesn't know about them. A little bit about their kind of background in Australia and their kind of their track record.
Yeah, so when we had the property, there was a number of parties interested, and we chose Cygnus because Cygnus, the management team is excellent. If you go on their website and you see their management team, I mean they're world class, from their executive chairman to their chairman to their geos. So yeah, they've been very successful in the past. I mean, these are guys that were behind Bellevue Gold. I mean, that thing is, I think, going into production and brought it from basically inception to $1 billion. So, our view is we might as well follow those that have the right track record, because the last thing we wanted to do was place the gold into their hands and they couldn't raise the money and drill it. They've superseded our expectations, to be honest. I mean, they had a lot longer to do the drilling and spend the initial $4 million. And I mean, they blew through that in like 7-8 months because they're aggressive and they had good results. So,
and also I think that's the other good thing, which I think investors, I don't know if they appreciate this or not. One of the things, again, with exploration is it's like in any business, it's execution. It's getting the work done, getting the drilling done. And right now, there's bottlenecks in, so you got to get the drills, you got to get the people, the talent. I mean, it's just like the tech industry has its, you got to have the right people, you got to all, and this is, and these guys have done it. So it's really incredible. So we're a couple months. So again, we're now going into the what is it, the home stretch, so to speak, for this inflection point. How much more, like, what kind of drilling results are we going to be getting? We're going to be getting stuff like what, like every other week? Now, this is stuff from back from the winter, right? This is stuff that's going to be coming in every other week probably by now, the assays.
Yeah, from my understanding, I mean, I think they're putting all those together and they're going to come out with, like I said, they've said that they're going to come out with an estimate based on those. So I think it's going to be sooner than later with whatever's remaining. Obviously, there's a lot of work in putting that together, and they're busy compiling all of the data. But again, I mean, so far from what we've seen from them, I mean, let's say they had 18 months to spend it. They spent it in 6 or 7. So
by the way, it's a good thing. That's a positive, right? That's also positive because we want to
get. They're smart. They're there to drive value. They realize the location we're at. They realize that we have an opportunity. The faster that you get a resource, the faster that everything happens. We're in a good location to take advantage of that.
Just
drilling.
Yeah, just for some perspective, because look, one of the issues I know we've had with some companies is that it takes them forever to get anything done. I'm talking about like the tech space, like it takes them forever. The reality is they're not executing. Here, these guys, I mean, the idea is they're getting the same amount of work done that they were going to supposed to do in 18 months. They got it done in 6, in a third of the time. And I'm assuming they're within budget here, right? So that is that's a very important distinction here. And now here's the question I think people may ask: what's the idea? They get this resource estimate. Let's 8 weeks or so. At that point, what happens next? What are the next steps? Is a plan to go into production at some? I mean, or are they going to do it, or they're going to sell it? You're going to sell it off to a bigger partner. What's the idea? What's the game plan?
Yeah, I mean, I think, I can't speak for them, but what I would say, just knowing from so far, I mean, they're going to keep drilling, and I think if you look at a lot of the Australian companies, they're quite astute in the fact that they don't stop; they just keep going. If it's there, they keep drilling and they keep adding to the resource, and I think that's a smart thing to do. So, I think with the land package that they have, and there's more money to spend as well. Like they're going back out in July, so I definitely think that. Yeah, I mean, if I look at the past track record, I think they'll just keep drilling and looking to make it larger and larger. I mean, I don't think it's their goal to stop at 10 million metric tons. I think their goal is to find as much as possible.
Right. So the whole idea is essentially to I guess same thing that you're going after is to maximize the value of the asset, essentially to prove out potentially it could be, I don't know, what if it's 100 million metric tons, potentially, why not?
Well, I think as long as you have the money to drill and to continue to prove it out, I mean, I think that's the most important thing, right? If you look at a lot of the other companies, especially a lot of the most successful companies, they're Australian companies. I mean,
Hmm.
the Australians have been the wisest, individuals, I would say, out of everyone. I mean, they saw the opportunity, they see the subsidies from the governments, they see the largest market for vehicles being the United States of America, and they rushed over here and grabbed good properties.
And
And
this is kind of their special, or this pegmatite stuff. This is like that's kind of their
yeah,
special. This type of drilling and everything else. Okay, um, very interesting. Okay, let's cover also. Lately there was some insider buying. So what's the insiders are buying the stock? I would assume that's you see an upside in the stock.
well, I mean, I think if insiders are buying, it speaks for itself, right? I can't really say too much, but yeah, I mean,
Okay.
if you look at how much money we have in the bank and you look at what we have, it would be up to the investors to really take a look at that, considering what we're trading at.
Yeah, and I've noticed there was very positive comments from investors. Kind of, I've noticed on social media, regarding the drill results. So it's still the thing is that the stock is still not really on the radar of most investors. That's why I think the opportunity still available. That's why it's still kind of this ground floor situation. People don't quite either they haven't heard of it or they don't quite understand it yet. So I think it's we got some very interesting upside. Okay, Dean, what's next? What's kind of the big picture? What's the big picture? Are you basically looking to? Are you going to be adding more properties? Are you looking at more properties in that area? Are there more? I mean, can you get more? Or what's your game plan for Stria?
Yeah, I mean, I think that we believe in the Pontax region. I mean, obviously others do as well because they're there. You see Brunswick there, you see Patriot there. You know, you've got a lot of the big players. If you look at map and you check out our last press release of who's there, so partners, we're looking to work with neighbors. If we can grab property, absolutely we will, and we're gonna go and do what we did in the first property. We're gonna go out and analyze it and hopefully come back with good results like we did the last time, and then we can decide if we keep it ourselves or if we make a deal again with our partners, because I think the important thing is like we're interested in working together. I mean, I think a lot of junior companies try to pull off too much, but I think that
Right.
basically we're pragmatic in the fact of who we are and the size we're at. Cygnus has been very successful in taking the kind of the north extension of the strike that they picked up, and we've now picked up the southern extension. So the two companies, I think are working together in the sense of trying to make sure that we can solidify the area and really have a good kick at going forward and creating something. So it definitely helps, I think, for the cooperation between the two companies.
Yeah. So I mean, I think to sum up, I think what makes this kind of compelling, for investors, again, it really comes down to, I think, the execution. Yeah, sure, you got the great project, but there's a lot of companies. We've always seen companies that have
Yeah.
projects, potential, etc., and they never execute. We've seen that so many times, right?
Yeah.
Here we actually have, we got execution. We got, it's basically it's locked in. You have a partner that's paying for everything. They've so far they've exceeded, I mean, speed wise, and now we got this blue sky, even more blue sky potential with this additional project. And again, the first one is still, this is, you said they only drilled so far 1% of the property, basically.
Yeah, absolutely. And I mean, to your investors out there, I would say like we're like the oldest rookie, right? I mean, we're at the beginning, but we're not at the beginning. So there's a good 14, 15,000 meters in there. You can check the results. The results are in line with what they should be. I think it's just a matter of visibility, and I think that that's probably the biggest catalyst for us. We've got money in the bank. We have a tight float, so I think it's just eventuality that people will just catch on to this story, Jack.
Yeah. So to wrap up, you get a market cap right now of roughly, it's under 10 million now, 7 million, whatever. It's under 10 million. It's whatever, 8 million, 7 million. And you have there's multiple catalysts now because you got the resource coming up 8 weeks out. You got the new project, and there's other, there's still, again, you've only touched less than 1% or 1% of the existing Pontax project. So Dean, this is very exciting. We're glad to have you back on, and let's get an update. When do you think we can have the next kind of when is the next drill results expected? Do we know? Like, what's time wise? Is next 10 days?
I'm not sure exactly when they'll be coming out. I mean, but definitely they're all coming in. The remaining assays, I was told, are going to be completed and coming in before June. So I'm not sure exactly when they'll be releasing them. Again, our partner is kind of driving that on that front. But definitely we should have some news as well. We
How many?
from our sampling that was done in the past on the new property. So we may have something on the new property, and then we're going to get out in the end of June and start doing some sampling as well based on those returning assays of the sediments that were provided to us when we purchased it. So
Okay.
new news on that as well.
Okay, so this, I don't want to press you on this, but like over the, let's call it, over the next 6 to 8 weeks, how many news, how many like how many news items, how many news releases do you think you're going to have over the next, let's call it 6 8 over the summer? Basically, we're in May, June, July, August.
Yeah, I mean it's difficult to say, but I again, we're going to have 2, 3, 4, I would say coming out. I know that they're working on it. I can't say that there's a resource, and I'm very cautious about.
Right.
Don't like to be too promotional and say things that are not going to be true. So I can't say. All I can tell you is that they have said, if you look at Cygnus Metals and their ASX announcement as well, so it's public disclosure, that they're looking for a maiden resource in June.
Okay.
I have no reason not to believe them because, like I said to you before, they have exceeded our expectations on every front.
Okay, so this is okay. So basically, this is their statements. Yeah, we don't want to be over. We don't want to be, again. The last thing we want to be is over promotional here. All the Canadian regulators, they love watching these programs with popcorn. for any kind of statements that might be, over promotional. But yeah, so the idea is, again, I think investors should be advised to read all the news releases, look at the drill results, and also on Cygnus on their releases, they also have data on this, right? So there's a lot of information that people can digest. And let's see. Okay, and also the good news is you're going to have some initial exploration on this new project over the next couple of weeks, also, right? You're gonna have some new.
Yeah, we'll have a little bit of information. Just we're waiting to see what the signatures are like, and then we've already booked to go out there at the end of June. So we're excited to get on that property. The property looks great, and again, our strategy is to try to maximize shareholder value and spend a bit of money to see what we have and what's there, and hopefully we're successful again. And we're in the right strike zone, so we look forward to putting some effort into that and sharing those results with our shareholders once we get them.
Okay, now I'm just trying to kind of analyze this. How I'm trying to get into some investor psychology here. The size of the new property. How does it compare to the size of the existing one? Are they the same size basically, or it's about the same size, right?
Yeah, they're very similar. They're about the same size. I mean, so when you talk about parcels like this on the strike, I mean, there's a lot of strike, right? You might have 50 kilometers. I mean, this thing's probably about 34 kilometers away from where we are, right on this towards the road. So yeah, it's a large strike. There's a lot of a lot of companies will blow that up, but what's more important is the actual strike itself, that you're on that trend, right? So we're on the trend, and that's the most important thing for us. And we're excited to get our hands on that project.
Okay, I mean, so, where I'm going with my question is, in theory, the projects are both more or less kind of the same. In theory, the stock should be worth double what it is right now. I mean, potentially, based on especially if you get some good early data, maybe then investors could extrapolate. Okay, well, if these guys have some good data from this, and they were, that thing, it should be worth at least double, no? Logically.
Well, I think if people look at the math, and I mean, if your investors take a look at what we have, right? If you look at how many shares we have outstanding, very low count. You look at how much money we have in the bank. So if we have, like, say, 2.4 million in the bank, we're expecting any day after spending the 4 million that Cygnus spent, we should be getting $2 million of stock or cash, right? Which would bring a value of roughly $4.5 million, 4.4. And then you look at, again, going back to if they come out with a resource estimate, and depending what that resource estimate is, when it comes out, they should take a look at that resource estimate and kind of look at the comparables, see what the valuations are per, every 10 million metric tons or what have you. And then you can start to kind of look at the math. I mean, I can't tell you the math, but I think that people can kind of see the math. And I think sometimes investors look at companies that are smaller and say, well, they're going to have to dilute a lot to spend money. Well, that's not the case. I specifically went out to do a deal where someone else, better, smarter, more experienced, and has more access to capital could do the work. And it's a lot less dilutive this way than it would have been for us to do. So we actually have capital in the bank, and we can go out and do the work that we need to do. So our situation is a little bit different. I think our model is a little bit different. And I think for people who are looking for, something to invest in beyond just for what we discussed about the oil switching to electric vehicles and the subsidies, really, if you just do a bit of math on our project, and if you do a bit of math with our market cap and capital and a few other things, then I think they can come up to their own conclusion, and kind of the conclusion that we believe ourselves, and part of the reason why you see insiders buying.
Yeah, no, this is the type of thing we look for, where it's a stock. It's an asymmetric type of setup. Dean, okay, on that note, I want to thank you, and we look forward to getting an update in the next week or so.
Fantastic. Thanks for having me, Jack. I appreciate it.
Thank you again, Dean.